Okay, we are on video number 11. Last video we went over what a fair value gap is and how to identify it. In this video, this is going to be a part 2 of fair value gaps, and we're also going to probably do a part 3 of fair value gaps tomorrow, showing you what an inverse fair value gap is and how to use that. But today I just want to go over when you guys should use a fair value gap, how we can use it with a liquidity sweep, what we already have learned, and when we can use it with a liquidity sweep, break a structure, and use it as a continuation confluence. Because again, we're not just taking trades off of a fair value gap, we're taking trades off of a fair value gap once we see a liquidity sweep, a break a structure, and then let's say it's our third confluence. We want to use that to show us that, hey, price is probably going to continue in this direction, more orders were filled to make price go in that specific direction. So again, this will be a part 2 video. It shouldn't be too long. It's pretty much the same thing. I just want to go over how to use this so you guys don't get it confused with. Again, you're going to see fair value gaps all over on the chart, but we want to use them in the correct way, use them with the liquidity sweep, which we've already seen, and then move on from there. So again, let's get into this video. Okay, so as we know, a fair value gap, it consists of 3 consecutive candles, right? So on a bullish fair value gap, we have an example right here. We'll just go over real quick if anybody forgets. Remember, we'll put you to the test real quick. A bullish fair value gap is 3 consecutive candles to the upside. Right here we have an example. 1 candle, 2 candle, 3 candle. We're going to mark that gap in between, right? So we start from the first candle wicks high to the third candle wicks low, right? Mark it out here. Bang. That would be a fair value gap. We'll do another example. We have another example right below it. 3 consecutive candlesticks up. We have the first candle's top wick to the third candle's bottom wick. Bang. That is going to be our fair value gap. And this is literally going to be an example that we're going to use in a second. We'll just go over it real quick for just a little recap. So let's find a bearish fair value gap for you guys right here. A bearish fair value gap is 3 consecutive candles to the downside, right? And we're going to go from the first candle's bottom wick to the third candle's top wick, which would be down here, right? Bang. There's a fair value gap, bearish fair value gap. Find one more for you guys right here. Again, if we are in a downtrend and we're moving down, it doesn't matter what the first candle color is or the third candle color. As long as this middle candle is red, this is going to be a bearish fair value gap. So look, we have the same thing right here. We're going to go from the first candle's bottom wick to the third candle's top wick. Bang, there's a fair value gap right there. And as you can see, this is an inverse fair value gap, but we're going to go over that in the next video so we can just go over just that and not confuse you guys in this video. So a fair value gap, guys and girls, whoever's watching, we have to remember a fair value gap, the way I use it, is a continuation confluence. We can also use it as a place for a price to go down to, fill more orders, and continue price up. So for this example here that we were going to use, right, this is a 4-hour and a 1-hour fair value gap. Usually, if I'm going to be marking out 4-hour or 1-hour fair value gaps, I want to see a 5-minute break of structure. So I scale down to the 5-minute time frame, just like how we would do a liquidity sweep. Well, again, we didn't teach that yet. So let's not get too into it when we get to strategy creation. But again, if we wanted to see a reaction off of this area, let's say, mark from the first candle's high wick to the third candle's bottom wick. This is a bullish fair value gap, right? Okay. Make this green. Let's say we were looking to take a trade off of this fair value gap for confirmation. So we know what a break of structure is and we know what a liquidity sweep is, right? Let's say we have a 4-hour fair value gap right here, and we also have a 4-hour low right here. I usually mark these yellow. This is a perfect example of where we would take a trade, right? So we have a liquidity sweep, and we're filling in a high time frame fair value gap, right? So we would be expecting price to sweep liquidity here, fill in a little bit of that fair value gap, which it does, and then continue what? Up. So what we would do here is we would most likely, or I would most likely, scale down to the 5-minute time frame, right? We'd scale down to the 5-minute time frame, look for technically a break of structure. I usually look for a 5-minute break of structure first if it's off a high time frame liquidity sweep or a high time frame fair value gap. So what we're going to look for is a 5-minute break of structure. So we know what a break of structure is now, right? Since we went over that video. We're going to mark out our break of structure. Here's our most recent high, right? We don't break it yet. This is our new most recent high. This is our most recent high. Then this is our most recent high. Then this is our most recent high. Right here, look. This is what you would look for, a 5-minute break of structure, right? Then we would probably look for another continuation confluence like equilibrium, order block, breaker block, or fair value gap fill, right? But here in this instance, we're not going to get into that yet. What would we basically be looking for? And this is actually at 2:30 in the afternoon, so this would have been PM session. I don't personally trade PM session. I only trade AM session because I'm better there. But again, let's go over this example. So look, we get a breaker structure to the upside, correct? We would probably honestly wait because again, this is after PM session once our trade would enter. But look, we end up forming a, let's see what we form here. This is going to be an inverse fair value gap situation. Let's just go off the 5 minute now just to use this as an example. Right? Look, we formed a 5 minute fair value gap here. We formed a 5 minute fair value gap here. We broke structure to the upside. We actually ended up breaking structure back to the downside. Right? We come into this first fair value gap. It looks like we're going to get a reaction off of it. I wouldn't enter until we get at least a break of structure and scale down to the 1 minute. So we don't get a break of structure yet. We end up inversing this fair value gap, which I'll go over in the next video. So we X this one out. This one doesn't matter anymore. We come down and we visit this second fair value gap. And as you can see, we end up coming up, getting a break of structure to the upside right here. We get a break of structure to the upside on this candle, right? As we can see, let's just say we're not going over entries and exits and stuff like that yet. Let's just show you how fair value gap works. Look. We end up forming another fair value gap here and another fair value gap here. So we already had a break of structure to the upside. What you want to do is if you see a reaction like this where a candle goes through, it wicks down, we would want this to close as a bullish candle, so we wouldn't enter off this candle. But as we can see, the second candle comes into it, we get a bullish reaction off of it, and you're always going to wait for a candle closure. I personally always wait for a candle closure before I enter because you never know what the candle is going to do. But again, some people just put a limit order here. When the fair value gets tapped into, then it continues. But again, I wait for a candle closure. Here would be a perfect example for an entry. So we'd put entry here, and then we'd put our stop loss from where the fair value gap was created. So we actually have two fair value gaps. We have this fair value gap and we have this fair value gap. So I would most likely, again, we're not going to go over stop loss and take profits. Put it under where this fair value gap's low is, right here. And then you would target your buy side liquidity above. We could target this high. We could target this high. Again, this would have been a good trade. This is just based off of the 5 minute time frame where you could have took it. But again, we're not going over entries and exits at the moment. We're just showing you how to use a fair value gap. Correct? Cool. We'll go over strategy creation and when to use this stuff and how to use it, what time frame, when you should use it in New York session. We're going to go all over that stuff in future videos. Right now, we're just focusing on how to incorporate fair value gaps, liquidity sweeps, and breaker structures into your strategy. Right? And we'll go over inverse fair value gaps in the next video. So we'll do a part 3. So let's say, let's look for another liquidity sweep and see if we could find a fair value gap for you guys. So we have a 1 hour low here. Make this. We have a 1 hour low here. Again, we already went over liquidity, so we know how to mark this stuff out, right? So we have a bunch of low resistance draw liquidity here. We have this low, this low, this low. These are all hourly lows. So price comes down, sweeps out all of these lows. What I would do is most likely, if it's a high time frame draw on liquidity, we scale down to the 5 minute time frame. We're going to see where liquidity got swept. As we can see, this is literally the example that we just went over. But again, we see that the fair value gap, look, this one ends up getting filled. The first one got disrespected. This one ends up getting filled. We get buying candle closure out of it. You can enter off this candle right here, seeing buying pressure out of it. Stops below where the fair value gap was created. Target your buy side liquidity above. Right? Let's go over another example because we just went over that one with the 4 hour. Let's go over for another 1 hour sweep. So we could go over this one right here. We have a 1 hour low right here. We mark out our draw on liquidity. Again, we're just going over how fair value gap works. We'd scale down to the 5 minute time frame. We'd look for a break of structure, right? This one's perfect. Look, guys, this is bread and butter right here. Look, we get a break of structure. 5 minute break of structure. Bang, right here, after a liquidity sweep. Sorry, my bad. 5 minute break of structure right here. This is the most recent low. We get a break of structure. What do we form? Look, 5 minute fair value gap right here. From this candle, this candle's wick's high to the third candle's bottom wick, right? Perfect. We get a candle down into it, and then we get buying pressure out of this first candle. We can't the candle that comes into it, we get a bullish candle out of it. Candle closure, wait for that. That could have been our entry right here. This could have been our entry off this candle. Put our stops below where the fair value gap was created. So the first candle's bottom wick. Target your buy side liquidity above. And guys, look, it works. Right? It's literally used as a continuation confluence. I'm not just saying you're going to enter off your 5-minute time frame. You can do that if you guys want, but you're going to be a little bit more patient. But if you guys were to do that, I would wait for a high time frame liquidity sweep. 5-minute break of structure, look for a fair value gap that gets retraced into, see a candle that goes into it, shows buying pressure out if we're trying to see price go up. If you see a buying candle come out of it, you want to see a candle closure out of it, a reaction off of the fair value gap, the bullish fair value gap. You see how this candle wicks into it, and then we get buying pressure out of it, we get a bullish candle close out of it, that could have been your entry, go from there. Correct? It's pretty simple, guys. But again, this isn't just going to make you profitable on how you guys use it. This can give you the tools you need. But again, you got to work on your psychology, your risk management, your emotions. If you miss a trade, this isn't going to work every 100%, every time 100%. But again, it's just giving you guys the tools to make you be able to read the markets better and identify when and when not to take trades, especially when we start getting later into this 2.0 blueprint. You guys are going to learn a lot more and hopefully be able to read the markets really well. So again, let's go over a bearish fair value gap. Excuse me. Sorry. Let's go over a bearish fair value gap. See if we can find a liquidity sweep. So this looks like we get a liquidity sweep right here. Let's see if it lets us go that far back. This is Thursday the 5th. Okay. All right, look. We come in. This is before PM session, right? So we honestly already swept this out, but price wants to come back up. We sweep out these highs right here, let's say. We come up. Look, we get a break of structure to the downside, right? We already know what a break of structure is. I shouldn't have to explain that to you guys again. We already went over in the video. But look, we get a break of structure to the downside. We form one bearish fair value gap right here. Make this red. We form another bearish 5-minute fair value gap right here. Same thing happens again, guys. Look, we come into the first fair value gap, right? This we wouldn't be an entry yet. If we're trying to look for a candle to go, if we're trying to look for a downtrend and we're in a bearish fair value gap, we want to see price retrace up back into that bearish fair value gap, and we want to see selling pressure out of it to show us there was confirmation of more sell orders being filled. So again, we wait for a sell candle to get out of it. This one barely touches into it. But this is an instance where you can scale down to the 1 minute. It's probably not going to let us because it's so far back on June 5th. But again, this could be an entry right here. We get a bearish candle out of it after this bullish candle was in it. This could be an entry. I would probably put my stop above this second fair value gap in case we want to come back down and revisit it. But then you end up targeting your draws and liquidity. Target these lows. You can target these lows. Would have hit for a 1 to 2.47. That's plenty right there. And price even continued down even lower if you wanted to target other draws and liquidity. Right? Let's show another one. Again, you guys are just going to go back in your FX replay or your trading view just like this. You're going to identify a liquidity sweep, a 5-minute break of structure, and then a fair value gap fill. See how the market reacts off of it. That's all you guys are going to do. I just want you guys to identify this stuff right now. We're going to go over the strategy creation stuff towards the end of this boot camp. It's going to take some time for me to make these videos because I'm trying to do it day by day. But again, we're going to get there. I promise we're going to try and give you more and more information as the videos go on. So here's an instance where you can use, here's a big bearish 4-hour imbalance, right? So look, price comes in to this bearish fair value gap. We come up to the 50% level. We end up breaking structure to the downside on the 4-hour time frame, correct? Out of this area. So that means we're most likely going to continue down. This is where we would scale down to the 5-minute time frame. But let's just go back this far. I don't know if it's gonna. Nope, it won't. Never mind. We could just play this off the 4-hour. Look. This is an instance where we get a break of structure to the downside. Let's pretend we're just identifying this. We're not going to be entering off of this. We break structure to the downside. We're in a 4-hour balance. We create another one after breaking structure to the downside. We come into it. We get a bearish candle out of it. This could be a sell position right here. Stops above where the fair value gap was created. Target your draws and liquidity below. Bang. We got all this liquidity. This trade could have ran for 1 to 3.76 on the 4-hour time frame. Like, it just shows you. And then look, price ends up coming back into the fair value gap that we were taking the first trade off of. We end up getting a break of structure to the downside again off of this one. Could be an entry off of this break of structure to the downside again. We'll put our stops above the fair value gap, target the sell side liquidity. We have equal lows almost right here. Relative equal lows. This could have been a good draw on liquidity on the 4-hour. 1 to 2.76. You can target all these lows again. Bang, bang, boom. Look at that. Like, this stuff works. This stuff really works. Go to the 15-minute time frame. So whenever we use a 15-minute time frame, I usually scale down to the 1-minute time frame. And again, we're going to go over strategy creation. I don't want to get you guys too confused. Let's just see if we can find any examples here on the 15-minute time frame. Okay? So look. We have a 15-minute low right here. Price comes up. What we would look for after we sweep liquidity, we probably scale down to the 1-minute time frame, right? Scale down to the 1-minute time frame. Look at this stuff, guys. It works. It works. I'm telling you. I promise. Look. We get a fair value gap right here off of the liquidity sweep. And again, this is when we were going to get into inverse fair value gaps, because we get 2 inverse fair value gaps. Let's just not get into that. Okay, yeah, we're not going to get into that. What we could say is, again, let's just go off a break of structure, liquidity sweep, and fair value gap fill. Let's say we come up, we sweep liquidity, we end up breaking structure, not on this candle. Let's make this red. We don't break structure there, we form a new high. Bang, we mark this high out. Look, we come down into the fair value gap, right? We come back down into the fair value gap. We get buying pressure out of it. Is this first candle out of the fair value gap yet? No, this candle closure is not out of it. We would look, for the next candle right here. But we didn't get our break of structure yet on the 1-minute. Let's say we're just going off a break of structure yet. These other confluences we're using in the future. This could have been an entry off this candle with the other confluences, but we're not going to go over that. We get a break of structure on this candle here. We saw that price retrace back into a fair value gap. So we have a liquidity sweep, a fair value gap got respected, and we end up breaking structure to the upside. 3 confirmations right there. Correct? This candle, if we're going off the break of structure, entry right here, stops below the fair value gap. And we actually created another fair value gap right here. So you put your stops below this low where this fair value gap was created. And then on the 1-minute, you could target your draws and liquidity. We could see this trade ran to wherever it wanted to go. Again, wherever your draws and liquidity are, let's say your final take profits at these highs, bang, 1 to 4.6 would have hit. Price would have continued up. And again, this is at a random time. I think this is Asian session. Yeah, this is Asian session. So, yeah. It works, guys. It works. I promise. But again, fair value gaps can be very simple. You're going to see they're going to be all over the chart. Right now, I just want you to use them with a liquidity sweep, a break of structure, and then see how price reacts off of it and see what direction price goes. Okay? Next video, we're going to go over... Let me make this a little bit bigger. Actually, we're not going to make this bigger yet. Look, this is what we're going to type it out. We're going to type it out for you guys. What you guys are going to go over is, look, go back, test, look for liquidity sweep, either high time frame, meaning the 1 hour, let's do the 1 hour / 4 hour. Look for a liquidity sweep either high. Let's do 2 of these. I'm sorry. Trevor's barking too. Bear with me. Look for a liquidity sweep high time frame 4 hour and 1 hour, right? Scale down to the 5-min. Look for break of structure, then a fair value gap fill with a candle closure out of the fair value gap. Let's move this over here. Come on. Fair value gap. You guys should know what that means. If you're either bullish or bearish. Okay? There's your high time frame one. Let's make another one. Back test. Look for 15 min liquidity sweep. Then a 1 minute break of structure. Then a 1 minute fair value gap fill with a candle closure out of it. Bang. Okay? So we have, this is where you guys are going to go back and back test just for now. You're going to back test, you're going to look for a liquidity sweep of a high time frame, like a 1 hour or 4 hour. You should know how to identify a liquidity sweep already if you watched my last video, right? Scale down to the 5 minute time frame, look for a break of structure on the 5 minute, and then look for a 5 minute fair value gap to get filled with the candle closure out of the fair value gap. If we are in a bullish trend and we have a bullish fair value gap, we want a bullish candle to close out of the bullish fair value gap. So we want price to go into it, show a wick down into the fair value gap, and show buying pressure out of it with the candle closure of a bullish candle out of the fair value gap. If we are in a downtrend and we're looking for a bearish fair value gap to get filled, we wait for price to retrace back into it. If we see selling pressure out of it with a bearish candle closure out of that fair value gap, we enter and go from there. Okay? Same thing, you're going to go back test, look for a 15-minute liquidity sweep, scale down to the 1 minute time frame, look for a break of structure on the 1 minute, look for a 1 minute fair value gap fill, see where you would enter, go from there, and make sure it's always a candle closure. Okay? Go back and back test this, demo trade this in the live market. I promise you this stuff works, but again, this isn't the holy grail. This is something that's going to help you succeed more in trading once you guys figure out the smart money concepts more and just overall help you get better performance in the markets, okay? So instead of you guys just entering blindly and gambling, now you guys are starting to learn how the market works when there's certain strategies and everything like that. But again, there's a million strategies out there. This is the strategy I use. Again, it works. Sometimes it's not going to work. Like, literally, if you go back and watch my trade recap, I've traded terrible this week. I've used the strategy terrible. I know that. I'm journaling it. I'm trying to get better every single day, just like you guys. We all make our mistakes, but again, we get better every single day. Sometimes this stuff doesn't work. It's not going to work 100% of the time, but again, if you have good risk management, good psychology, good emotions, and you know when and when not to trade, when the market looks good to use this stuff, you can be profitable. There's people who are profitable with this. I use it to pass my PA accounts. I've gotten payouts using this stuff. I've made money using this stuff. But again, you got to use it correctly if you want to be profitable doing it, okay? Cool? Awesome. We'll make part 3 tomorrow with inverse fair value gaps, but this one's going to be about using a fair value gap with a liquidity sweep and a break of structure. Cool? All right. See you guys tomorrow. Appreciate it.